So down 15%, Cameron, but I guess up about 6% off the lows. Was mentioning earlier, this is about the fifth rally we've had on the way down from the peak in January. Anything going on here in terms of the starting point or the character of this rally or what, the news flow is around it to make you think that that this one might stick a bit?
Well, the challenge we have is that we are in a downtrend. So I think we have to be rather skeptical of rallies here because the risk is that we hit overhead resistance and roll over. The 2000s episode of the NASDAQ is really helpful in reminding us that bull traps can be dangerous. We had 5 counter trend rallies over the course of that 80% bear market, one as large as 50%. So counter trend rallies are really common. And we can't really judge it just on one day. Yesterday, volume was rather weak. We did see some healthy internals. There was some good volatility to the upside, but we do want to be very careful once we start hitting up against those 50, 200-day moving averages that are now downward sloping, because we do think the risk is that we roll over and it doesn't stick.
Yeah, I mean, there's no doubt that, when a downtrend gets momentum, it's difficult to fight, Cameron. But is your premise that we are in one of these multi-year declines? And I guess the question is, if you're looking to build a portfolio for a longer-term period of time, when the average stock is down 30%, is there not something to be done on the buy side?
Well, certainly there is. I mean, we're starting to see some interesting, compelling valuations emerge. And one area that we're looking closely for a level that we'd want to be much more aggressive buyers is when we hit the 200-week moving average, which is about 12% lower from here. That's when valuations become quite attractive. But we think that we're stuck in a sideways chop for some time. This doesn't necessarily mean a multi-year bear market, but we don't really think that we have the setup for a re-entry into the kind of powerful bull markets that we had in 2021 or 2019, simply because we don't have the Fed at our back yet. We don't have a pivot from the Fed to be supportive, which means that we're stuck in this sideways chop. And we really haven't seen the kind of positioning flush or big cuts to estimates, big cuts to valuations that broadly would really justify backing up the truck, closing your eyes and buying.
Gunjan, we're more than a year past when there was a peak in the enthusiasm for stocks that just were going to promise you some riches in the long term without a lot of cash flow in the moment, without a lot of, earnings support. So that seems to have gone by the wayside. But, is this defensive trade, maybe energy-based leadership? A lot of the things people are looking for is much more about, do you have the fundamental support and basically give me some cash along the way?
That's right, Mike. Cash is really king in the stock market right now, and it's a really, really big shift from what we saw in prior years, where it was all about what is the prospect for growth in the future? What can you do for me in the future? And what is that payout down the line? Right now, it's how much cash can you put in my pocket right now? And we're seeing that in this rush for dividend-paying stocks. Instead of Tesla, people are going to AT&T, to Altria, and they're even favoring high dividend-paying stocks over another investor favorite, those companies that did high buybacks. So it really highlights how the stock market has kind of been turned upside down lately.
Yeah, there's no doubt. And I know you track exactly what sort of retail investors might be doing in the stock and options market. And while there's been a steady decline, it would seem, in the activity of retail investors and short-term traders, I mean, you've seen some blips recently, right? I mean, GameStop's flying this week again on some sort of vague, tweets and things like that. So I just wonder if that if that muscle memory has completely gone away.
What's striking about the activity this year, as you pointed out, we have had these brief spurts of big rallies. And the activity lately kind of reminds me of the end of the first quarter, when we had such a brutal sell-off to start the year. And then the last few weeks of the quarter, you saw ARK soaring again. You saw the meme stocks soaring again. So for the most part, we have seen a lot of that speculative retail activity, dial back this year. But I think old habits die hard, and we are seeing them return from time to time. And that seems to be what's been happening lately.